Saturday, November 23rd, 2019, Maneco 64, home of alternative economics and contrarian views. I've been working on using this new software that I'm using now, Zoom, to film the videos. I can show you screenshots a lot easier than having to edit them in my iMovies. I hope this is better. Let me know in the comment section below. Billy's here this morning. It's around 10:30 Saturday morning. I've been trying to figure this out the whole morning. I've been choosing stories to talk about this morning, about the markets, what's going on, the Fed, elections in the UK. Before I start, though, I like to talk about Glint. Glint came out yesterday. I think they sent Thursday night. They sent clients emails saying they're coming out. They've come out of administration in the UK and the EU, and that they're going to start allowing people to move their funds around. Hopefully Monday the 25th. So that's good news. Yesterday I made my video. I hadn't seen my email nor the headlines early yesterday morning. So now let's have a look at an FT story about Glint that came out yesterday. So this is the Glint website. Let's move to the story. Well, that's an earlier story. I'm going to go first. Look at the story that came out yesterday in the FT. Gold payment startup rescued by investors. So I did get a message from the CEO yesterday as well about this, about the fact that they're coming out of administration. Glint Pay lets customers buy and use gold for everyday spending. So Daniel Thomas writes, UK startup that lets customers buy and use gold for everyday spending has been saved from administration by its management and investors. Glint Pay, which is backed by conservative MP Steve Baker and operates in the UK and US, allows customers to buy, sell, save, and spend gold through a MasterCard-linked debit card and app. It claims it is the first to offer direct and instant access to the spending power of gold, but collapsed into administration in September. So yeah, it's been 2 months since, I think it was September 18th, after its board was unable to immediately secure funding to repay an outstanding loan. So I guess now we're gonna find out a little more why they went into administration, because they couldn't speak, the management couldn't speak. So let's see what they say here. This week, the UK financial regulator gave permission for it to start trading again after it raised £5.7 million. It needed to exit the UK administration process. On Thursday, the process of unfreezing customers' account began. The US business was unaffected by the administration, of course. Glint said that all customers' funds, whether in gold or cash, had been secured throughout the process. The gold is kept in a vault in Switzerland, and customer money is either segregated bank accounts or stored as physical gold. I would also say that it's an allocated gold account, and it's in a Brinks vault. I think it's under Zurich Airport. That's what I've been told. The company's management, headed by founder and Chief Executive Jason Cousins, said existing and new shareholders had backed the company with new financing. He said there had never been any problems with the operations or financial stability of the group, blaming the administration on a claim made by a creditor, which had always been disputed by Glint. Glint repaid the loan and additional fees at the start of October. This is the interesting part here. In the administrator's report, business advisory firm FRP said the secured creditor, a Singaporean group called Niven, had expressed an interest in buying the business as an ongoing concern before the existing management paid back the loan held by the group. Jason Baker and Jeff Rowley of FRP said that the normal operations of the Glint platform in Europe were expected to resume on Monday, at which point clients will be able to use the full suite of Glint services and accounts. Goes on to talk about who are the main backers. It says one is a hereditary peer, Lord St. John of Blestow, Lord Flight of Worcester, Haruko Fukuda, former chief of the World Gold Council, Ben Leadsom, husband of UK Business Secretary Andrea Leadsom, Nigel McNair Scott, and so on. And it says at the end, Glint was launched in February 2018 and has more than 35,000 registered users in UK, Europe, and the US. It now plans to use the additional funding to help expand in India and across Asia, as well as launching a solid gold debit card. So I didn't know about that. So I personally got a Glint card last year, probably around the summertime last year. And I actually went to Spain, to Tenerife in November last year. I used my card there. I made a little video showing people you can spend your gold anywhere in the world, right? And I was contacted actually by one of my viewers. Let's stop the sharing here. So yeah, I was contacted by one of my viewers who asked me if I wanted to meet Glint. And so I went to meet them last year. I think it was before I went to Tenerife. I had a really nice meeting with them. And we talked about maybe becoming an influencer and promoting Glint. But that only happened really this year when Glint was launched in the US. I got a promo code for Glint. And why did I wait until, or Glint wanted me to wait until the US launch? Well, because even though I'm in the UK, most of my viewers are in the US. I have the second most viewers, of course, are in the UK. And then, of course, a few months later, this administration deal came along. I was disappointed. I personally still believe in the power of having physical precious metals. Why? Well, because that is the way to fight the present fractional reserve fiat currency central banking system. But I find the Glint card really convenient and very interesting, especially with the way the system's going. If you're able to put some of your fiat currency in the Glint app, convert it to gold, have it held for you, and at the same time be able to spend it or redeem it. I think the minimum they do is 10 grams. You can ask for delivery. They will deliver you the physical bar of 10 grams. That's the minimum. I thought it was a great idea. Of course, there is a third party involved, which is Glint and all the people they work with, and that's been the problem for the administration. I don't think it was anything that Glint did in terms of the funds or the gold. It was more the fact that they didn't do good enough due diligence about who was lending them money. That's my opinion. I'm sure Glint will have more to say about that. So how do I feel about it now? Well, the main question I have is, can you assure us this will not happen again? That someone will try to take over you and use financial engineering to try to like bring you down, to force you to sell out, because it hasn't been good for and great. It's a lot of stress for people. For 2 months, they can't access their funds or their gold. That's not something that is very fun. It's good that this thing has been sorted out. Of course, the US operations, they were running normally, but of course, it's a big cloud. It was a big cloud hold, hanging over the company. So that's the situation at Glint. Before I go on, I like to again thank all my viewers, all my subscribers, all the new subscribers, people who have interest in this channel, all the supporters, people who donate through PayPal or Patreon, people who use the Teespring store to purchase merchandise in the Teespring store. This is what you can find at in Maneco 64 Teespring store. You've got T-shirts, you got Billy silver bug mugs, you got End of Fed mugs, End of Fed stickers. You've got also the equivalent of the Bank of England and the Fed, right? Retired the old lady of Threadneedle Street mugs, T-shirts, sweatshirts. You've got a Keep Stacking T-shirt there. Keep Stacking Become Your Own Central Bank mugs with a US coin or a sovereign. So just wanted to put that out there, and thank you again for the support. So what about the markets and what's going on in the economy, the Federal Reserve, UK electioneering, campaigning? Well, yeah, I wanted to talk about the fact that, and I've spoken about this many times, I've been telling colleagues and friends, even before I started this channel, back in 07, even before the crisis, that all fiat currencies, they all go to zero. And the debt-based system that we have, they need to keep inflating, or else, you know, it's inflate or die. And why did I come to this conclusion even before the crisis of 08, 09? Well, because I've done a lot of homework, I've done a lot of reading about history, and one of the books that I highly recommend, and I'm gonna bring it up here now in this sharing mode, is Fiat Money Inflation in France, how it came about, what it brought, and how it ended. And it was written by Andrew Dixon White, late president and professor of history at Cornell University, sometime United States minister to Russia and ambassador to Germany. And he also wrote a history of the warfare of science with technology. I have to say, he was, I think, the founder, one of the founders of Cornell University. And just for disclosure, he was Skull and Bones at Yale, but it doesn't mean to say we can't learn from these people, right? So let's have a look. Fiat money inflation in France. So let's read the introduction, because I think it's really interesting to see what Dr. White thinks. So as far back as just before our Civil War, I made in France and elsewhere a large collection of documents which had appeared during the French Revolution, including newspapers, reports, speeches, pamphlets, illustrative material of every sort, and especially specimens of nearly all the revolutionary issues of paper money, from notes of 10,000 livres to those of 1 sou. Upon this material mainly was based a course of lectures then given to my students, first at the University of Michigan and later at Cornell University, and among these lectures, one on paper money inflation in France. This was given simply because it showed one important line of facts in that great struggle. And I recall, as if it were yesterday, my feeling of regret at being obliged to bestow so much care and labor upon a subject to all appearance so utterly devoid of practical value. I'm sure that it never occurred, either to my Michigan students or to myself, that it could ever have any bearing on our own country. It certainly never entered into our minds that any such folly as that exhibited in those French documents of the 18th century could ever find supporters in the United States of the 19th. Well, it's found supporters in the United States of the 21st century, and even the 20th century, I would add. Some years later, when there began to be demands for large issues of paper money in the United States, I wrote some of the facts thus collected into a speech in the Senate of the States of New York, showing the need of special care in such dealings with financial necessities, and thus exhibiting facts which Bishop Butler would have recognized as confirming this theory of the possible insanity of states. It is but just to acknowledge that the French proposal was vastly more sane than that made in our own country. Those French issues of paper rested not merely on the will of the free people, but on 1/3 of the entire landed property of France, on the very choicest real property in the city and country, the confiscated estates of the church and the fugitive aristocracy, and on the power to use the paper thus issued in purchasing this property at very low prices. So what happened in France? Well, this was just after really the French Revolution, 1790. I think the king was still around. Then he was guillotined, of course. Recommend you read the book. I'm going to put a free PDF file link below in the description of this video. It doesn't take long to read it. I read it many years ago in the early 2000s. I remember reading it after Bernanke made his printing press speech, helicopter bend speech in 2002. And it was then that I realized things are not going to go well. So, yeah, France had a lot of debt, completely political mayhem, of course. They overthrew the monarchy. There was like a lot of disorder, right? The revolution, a lot of terror, tyranny. They went from monarchy to something not great either. But one thing that they had left over was a lot of debt. So they decided to confiscate the church lands, the aristocrats' lands, those who fled, those who they chopped their heads off, right? And they started issuing assignats backed by all this land and property. And that was done through the General Assembly. Andrew Dixon White talks about how there's a lot of reluctance because they had problems, of course, almost 100 years before with the Mississippi bubble. John Law, who also printed money, right? So they were skeptical, but then they started, and the idea was that it was going to be QE1, right? Just to kickstart the economy, get things going. But they found out that every time they try to retire these assignats, things would go down again economically, commercially. So they kept issuing more and more, and they could never like stop, right? And eventually, the whole thing imploded. People lost confidence in the paper. There were many rules, laws that were passed forcing people to use the paper instead of silver or gold, right? You could be, if you were caught using other currency or money than the assignats, you could basically get executed. They had to impose price controls because what happens when you print a lot of paper money like that? Well, you get the paper money loses its value and everything goes up in price, right? And the thing about this is that it was backed by something, right? But it didn't even work because land is not money, right? And property is not money. It's not liquid. So this picture here is, and I'll read from the bottom here. It says, French Revolution, the printing presses, punches, dies, and assignats used for making money are burned on the Place Vendôme, engraving 1796, Paris, Musée Carnavalet. So that's what happened at the end when all this collapsed. And then Napoleon came in, right? And he actually reinstituted gold-backed system. So why am I talking about this now? Well, the Federal Reserve, we've been following their balance sheet, right, very closely. They started unwinding the balance sheet, and then they found out that it was not watching paint dry, that the stock market was having a lot of trouble stay up. So they restarted again. So let's have a look here what happened when the Federal Reserve tried to start unwinding. Here we go. I found an article here. This is realinvestmentadvice.com, right? And this is from February this year. Should we really not worry about the Fed's balance sheet? So here we go. At that time, this year, they're still planning to keep unwinding the balance sheet. So let's have a quick read here. Bill Dudley, he's the former New York Fed president. He's the guy who said that iPad prices were going down, that there was no inflation, right? I think someone came up with an expression, let them eat iPad, which is what Marie Antoinette said, let them eat cake, right? The starving Parisians or Frenchmen. Bill Dudley, who is now a senior researcher scholar at Princeton University Center for Economic Policy Studies and previously served as president of the New York Fed and was vice chairman of the Federal Open Market Committee, recently penned an interesting piece on Bloomberg. Financial types, and I quote him, financial types have long had a preoccupation. What will the Federal Reserve do with all the fixed income securities it purchased to help the U.S. economy recover from the last recession? The Fed's effort to shrink its holdings have been blamed for various ills, including December's stock market swoon and any nuance of policy, such as last week's statement on balance sheet normalization, is seen as a really big deal. I'm amazed and baffled by this. It gets much more attention than it deserves. Right, Mr. Dudley. So here you can see they started unwinding the balance sheet. 2018, you can see there, beginning, and then you can see how the stock market has had a few convulsions after that. And now, of course, that balance sheet is risen about almost 300 billion since the end of August. So let's have a look here at the Federal Reserve balance sheet, because what's happened, so here we go, end of August, it's here. You can see total factors supplying reserve funds, that's a balance sheet, 3,812,967,000. Well, that's 3.81 trillion, right? That's where it was in August. I think that was pretty much the bottom. And then up until last week, as you can see there, it had risen to 289 billion. And yesterday, the latest data, if you look here, it's dropped, right, from 4 trillion, let's see, 96 to 4 trillion 78. So is the Fed stopping the QE? Are they normalizing the balance sheet again? Are they shrinking it again? Well, in the face of it, it looks like it. But I think what's happening is that the QE they're doing, the 60 billion, is only for short-term T-bills. It's not for longer-term notes from 2 years to 30 years. So what happens in the balance sheet is that securities mature, right? So if the Fed doesn't buy those an equivalent security again, or an equivalent amount, that will come off the balance sheet. And I would venture to say that it was a note or a bond that matured, and it wasn't a bill. So I actually think the Fed is probably going to even increase their QE from 60 billion a month, or they will also move it up the yield curve. Not going to do just T-bills. They're going to have to do notes, which are from 2 to 10 years, and bonds, which are 30-year, they might have to increase the QE from 60 billion, let's say, to 100 billion, and then say that we're going to do notes and bonds. I think that's why the balance sheet shrunk. It wasn't because they're going to stop the QE. It's just because some longer-term paper matured, and they're only buying the T-bills, so they didn't replace the maturing securities. I think that's why we'll need to keep an eye on their balance sheet. It comes out every week, and it's public information for now. So let's look now. I wanted to show you because why you need to be aware of the central bankers and what they say. So I'm going to share something again here. This is Bernanke in December 2010 with 60 Minutes. It's a clip from this YouTube channel, Who's Jensen. And this is what Ben Bernanke said in 60 Minutes, December 2010.
Well, this fear of inflation, I think, is way overstated. We've looked at it very, very carefully. We've analyzed it every which way. One myth that's out there is that what we're doing is printing money. We're not printing money. The amount of currency in circulation is not changing. The money supply is not changing in any significant way. What we're doing is lowering interest rates by buying treasury securities. And by lowering interest rates, we hope to stimulate the economy to grow faster. So the trick is to find the appropriate moment when to begin to unwind this policy. And that's what we're going to do.
That the trick is to find the moment where we can unwind this policy. And what's the unwind of the policy? Well, that's what they try to do by unwinding the balance sheet, right? I think Yellen even said that it was going to be like watching paint dry, and they realized it wasn't. And that's why they have to reverse the QT this year. They started actually doing QE again. They've cut rates 3 times, right, this year, up until November last year. So 1 year ago, people like Goldman Sachs and other economists were saying that the Fed was going to hike 3 times this year. So they're finding out the hard way that you can't, it's very hard. Once you start down this policy, there's no way out. The only way out is to stop and everything implodes, or continue like the French did with the assignats, and then everything burns, right? So that's what's going on there. And oh yeah, what I want to show you now is, because he said that it doesn't increase the money supply, right? That's what he said in 2010. So what I want to show you now is M2. So M2 money supply. And mind you, the Fed used to do M3, but they stopped publishing that because that's probably gone through the roof. They stopped publishing that just before the 08 crisis. So here it is, M2. When Ben Bernanke gave that interview, I think it was at 8.7, as you can see there, December 2010, 8,783. That's 8.783 trillion. And you said they're not increasing the money supply, right, by doing QE. So let's see where we're now. Let's go up here. Oh, 15.2 trillion. So almost doubled the money supply since that interview with 60 Minutes, right? So can you really trust these guys? I don't think so. The other thing I wanted to show you is this interview here by Dick Fisher. He's the former Dallas Fed president, and I think this was sometime in 2014. He had retired already, I think, and this is on CNBC. Listen to what he said here.
Efficacy of the last QE.
I voted against QE3.
But do you think that central banks still have the power behind the stock market?
I think that power is running its course. I like to say that we injected cocaine and heroin into the system, and now we're maintaining our Ritalin. How's that? How do you come back to that one? But no, seriously, central banks, they did more than enough. And unfortunately, fiscal policy never followed through. And that's what everybody's waiting for. But this has been a hell of a rally. And companies have taken advantage of it to reposition themselves and knock up their bottom lines, their returns on shareholders. And
but are you surprised that it hasn't really had as much of the desired effect in the real economy? I mean, part
there you go. At the time that was at 17,000, we're now at almost, well, we've been above 28,000. So that was the former president of the Dallas Fed. So you see, that's why they're doing QE, not for the economy, it's for the stock market, right? And we know that I think the top 9% the wealthiest Americans own about, let's see here, I got the numbers, 86.3% of all the stock market wealth, corporate equities, and mutual funds. So, okay, let's keep going. Oh yeah, the other thing I wanted to announce today is that I did an interview earlier this week with someone called Crypto Rich. He's based in the UK. He covers cryptocurrencies, right? And he's been following me for a long time, my videos. He always tweets to me. He wanted to do an interview, so we finally did an interview. He published it yesterday. I recommend you go to his site if you're interested in cryptocurrencies. There it is, Bitcoin, gold, debt, and more with Maneco 64, Crypto Rich. Highly recommend his YouTube channel if you're interested in knowing more about cryptocurrencies. Okay, what about the political situation, economic situation in the UK and the elections? Well, I think the thing for people to remember about what's going on is that no matter who wins, Labour or the Conservatives, it's going to be more and more debt, more currency debasement, more inflation, more government spending, more intrusive government, less freedom, right? Yeah, the Tories might say they're the party of business and deregulation, but don't fall for that, in my opinion. So let's just quickly look at some of the headlines here. I saw this in the Sun. Happy ever grafter Boris Johnson promises £465 tax cut for 31 million workers if he wins general elections, right? There he is. We love Boris. Boris has vowed to cut tax for millions of workers, and it says here the Prime Minister insisted the huge tax giveaway was affordable, right? But experts warn the overall cost of raising the threshold to £12,500 would be £11 billion. So here you see what's going on here. All these promises, and we can't afford it, right, as a country. But it's not only the Labour Conservatives that are promising the world, it's also the Labour Party, right? Labour leadership defends radical tax plans, manifesto condemned by business leaders and economists who claim it would hobble the UK economy. Labour's leadership on Friday defended its radical plans to raise taxes and unleash huge public spending drive, which have sparked fears across corporate Britain a return to the 1970s. So that's what's going on. Whoever wins, watch your wallet. Make sure you protect yourself. Don't stay in the fiat currency. They're all sinking, as I said before. I hope you enjoyed this format. I hope you enjoyed the video. If you did, please give me a thumbs up. Make sure you share it far and wide. Seems like YouTube of late has been kind of shadow banning my videos. It's just I'm getting fewer views than I was 2-3 weeks ago. I guess it could be interest right now, and what I talk about could be decreasing, but you never know. So make sure you share it far and wide. That would help. And of course, you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great weekend, and I'll talk to you later. Take care. Bye.